My background was 30 years of finance. So I was working for some of the world's biggest investment banks. I started and ran the hedge fund sales business in equities and equity derivatives at Goldman Sachs in Europe. Then I went on to start and run a global macro hedge fund for one of the largest hedge fund firms in the world, GLG Partners, and eventually opted out of the rat race back in 2004, moved to the Mediterranean coast of Spain, where I started Global Macro Investor. And then 2014, I started Real Vision.
There's a lot to unpack just with that right there. So first off, like this, for everyone out there, macro investment, just describe that real quickly. What exactly is that?
Yeah, so you see people who look at a company and they think, I want to buy their shares. And it'll be based around the earnings and the cash flow and the potential growth of the company, whatever it may be. Macro investing is the opposite. It's looking at economies and how economies work and saying, okay, if that economy is doing good, bad, then how do I want to make money off that? Because the economic cycle drives the price of assets. When I'm talking about assets here, I'm talking about shares, equities. I'm talking about bonds. I'm talking about currencies, commodities, cryptocurrencies. So many things are driven by the business cycle, the economic cycle. So our job as macro-based investors is we look across the world and look for opportunities where the market's perceptions of what is happening are behind what the forecasts are now showing. And it's not about following what Wall Street tells you. It's doing work and trying to discover what's coming in the future. Our job in macro is to live in the future. And we look for the big trends or the big turning points, because that's when we make all of our money. The big trends in this world may have been the rise of cryptocurrencies, the recent rise of commodity markets based on supply disruptions that everybody's read about. Or it could be the rise of technology and how that impacts the NASDAQ. Then our job is to live between 6 months and 2 years into the future, to imagine what the world could be like, and then assess the probabilities of how it would get there. And then you place bets accordingly. It's a really amazing world of this, the world's most complex 3D jigsaw puzzle that you try and solve, and occasionally it all comes together, dissolves again, and you have to start all over again. So it's a huge intellectual challenge to put all of these moving parts, because you're looking at all of the economies and the interplay of all of the asset classes. It's a very rewarding way of investing. It gave rise to some of the most famous investors of all time. People like George Soros was a macro guy. People like Paul Tudor Jones, these are macro thinkers, macro investors. It's currencies and bonds and all of this stuff that most people don't really look at. Most of us in the macro world, from about the late 90s, we saw in about 97 and 8, Asia blew up. There was a financial crisis of epic proportion, and it was driven by debt. And that got everybody focused on debt. And the answer to the Asian crisis by the Western world was to cut interest rates, which ignited their own debt bubble. In fact, George Soros pretty much predicted it in the crisis of global capitalism. That's what happened, is the debt bubble moved. As the debt bubble moved, we got to the 2000 recession and interest rates went down even further, now at all-time lows. And we had a housing bubble, so debts went up and people borrowed more money on their credit card. Then the student loan bubble started as well. Then we got to around, now the financial system was by far the largest part of the global economy, and that blew up. But the answer to that was not to let it clear itself, which is kind of what happened in Asia to a certain extent. It was to support it. And the way of supporting it was cutting interest rates and doing something called quantitative easing, which was basically pushing free money into the system so people could service their debts. So you created yet more debt because everyone was incentivized to create debts, because now the government said, or the central bank said, well, we're going to try and defend your debt from blowing up because we understand it's too big. So you're now incentivized to do so.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
I'd got through the 2008 recession, having forecasted it, knew it was coming, because this was in many macro people's framework. There's a debt crisis coming. What was surprising to us, it never played through to the logical conclusion, which was kind of a proper full reset. So the system was re-pumped up with money, let it on its way again. And that made us think, wow, this is not good. The next part of the story was the European crisis, which was a sovereign debt crisis. Countries almost going bust and almost blowing up the whole of Europe. That was another opportunity to print money, prop up the system. And now the European Central Bank were buying every bond, every debt of any bank in Europe no questions asked. You can lend to anybody and we'll just take it off your balance sheet and pretend it didn't happen. So obviously debts continue to rise. Having seen this and see the dramatic impact it had on people around me, don't forget things like Cyprus happened where they basically they bailed in depositors in banks. What that means is a fancy word for saying you paid for the bank's mistakes and they took your money away and destroyed it or gave it to the creditors. And it's like, but I was just putting my savings in it. I had nothing to do with your bank. I'm not a shareholder. That all changed. So now you're on the hook for all of this stuff. And I realized that this was unsustainable. And also we learned from the 2008 crisis and the European crisis, all these financial instruments, because of leverage, are all wildly interlinked. And because you reuse things, collateral it's known, which you put down from a loan, like you put money down from a mortgage, when you reuse stuff, you don't know who owns it because it keeps getting reused. I spoke to the Federal Reserve at one point and found out that something like an average US Treasury bond was being reused 32 times within the system. So then you've got a problem of who owns what if everything goes wrong. It was a guy called Emil Woods that you and I were talking off air a second ago. I was looking at setting up the world's safest bank with a few global macro investor subscribers. Slightly hubristic thing to do, but I thought I'd give it a go. And it was bloody hard. If anybody's tried setting up a bank, it is not easy. So we went to Singapore, we went to Hong Kong, we went to Switzerland and the US trying to set this up. And then Emil said, you don't need to. Look at Bitcoin and look at blockchain, because this is an asset that is not encumbered, meaning you can prove ownership and is fast and secure and you can transfer it and all of these things that meant it could be the basis of a financial system that was better. I saw that and I bought it immediately and I got it. I wrote one of the first research papers on the macro perspective of Bitcoin back in 2012 or 13, which was saying, okay, if this is like gold, then the value with gold at $1,300, Bitcoin should be worth about $1 million. And that made waves, obviously, because it was worth, currently at the time, was $200. I think that forecast will end up being pretty right in the end. But that's what I had realized. And then I was an on-off investor in this space, and I sold out in 2017 early, and I'd made 10 times my money and felt like a hero, and I should have held on because the stuff I bought at $200, I sold it at $2,000 and it went to $20,000. I then focused on the space still, but I wasn't an investor. This was the rise now of Ethereum and other blockchains, and I could see where this is going. Emil, again, had talked me through smart contracts and what it could mean for everything from the insurance industry to all sorts of different applications. Crypto was silent. And I was waiting. I knew that this was the opportunity and the savings vehicle and basically the life raft for the entire financial system. But most people weren't aware of it yet. It was this fringe thing.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.